This next session, Global Economy African View Facing Financial Distress, will guide you through today's economic landscape, investment opportunities, and the fundamentals across African countries. Please welcome on stage our moderator, Adam Button, Chief Currency Analyst at ForexLive. Adam, the floor is yours.
Thank you very much. Are these working? Okay, you can hear me. My mic's working. You know, I'm a bit of a neophyte when it comes to Africa. You know, we write about investing all over the world, and Africa is so often left out of the conversation. And I want to have that conversation right now about really how or where I can make money investing in Africa. And first, I'd like just everyone to briefly introduce themselves. We'll start from this side and work our way across. It's absolutely an esteemed panel, and I feel very privileged to be here to have such great experts to ask about where to invest now all over the continent.
Thank you, Adam. So I'm Samantha Singh from Rand Merchant Bank. I work as an economist and a strategist. On the strategy side, it's more about sort of portfolio investments on both hard currency and local bond markets.
Thanks, Sam. My name is Jimmy Moyaha. I am a market commentator, but also the founder of Lebowa Capital. We're an asset management firm that specializes in alternative assets.
Hi everyone, my name is Elke Brink, and I am a wealth advisor and a director with PSG Wealth. And we specialize on wealth management, of course, and employee benefits.
Hi everyone, I am Tsepo Mudiba, a resident investment nerd from Canon Asset Managers. I'm the Chief Investment Officer there, and I have the lovely privilege of having to think about where the world's going and where to invest every day.
Wonderful. I think, you know, when I look at Africa, I think nobody's investing in Africa for a safe 5 or 6% return. You can get that in the United States right now. And I see a world where people are worried about a global recession, inflation. Jimmy, can you tell us why now is a good time to invest in Africa?
Thanks, Adam. If you take a look at what's happening on the continent and what's happening with emerging markets in general, the global macroeconomic picture is a difficult picture for all players involved, and emerging markets are offering you an attractive return relative to where they were pricing if you compare them to their developed market peers. So you're finding pockets where traditionally, if you were looking at treasury yields, treasury bonds, and that sort of thing, that was a safer bet. You put your money down there. But as you've seen with, for example, the US banking crisis, the maturity date on those treasuries has created a new financial problem. Now, those are new problems that are emerging at this stage, and what Africa then provides as an alternative is the resource is here, the commodities are here, the development of that resource remains within Africa. To export that towards the world stage is something that is always going to be taking place and has been taking place. But now you're coupling the overall macro uncertainty with the fact that your local picture on the African continent generates that return. You're still able to maximize on that return for the same level of relative risk that you were doing 5 or 6 years ago. So you're now getting a bit more for your money, and the world is still giving you a better risk profile relative to what you would have seen in the past.
Right. Elke, what is a reasonable expectation for investing in South Africa or in Africa in terms of a nominal return or a total return? What's the real possibility there?
Yes, Adam, I think it's important when it comes to investing, and I think that applies to a global mindset, should it be Africa, South Africa, is that local economic uncertainty or economic instability is not necessarily related to what you can expect to receive as a return in the market. And there, I think there's still a lot of value to be found in South Africa as well. But I'm including that in the African context. But I think if we look at the local bond market, if we look at the JSE, there's a lot of companies that don't generate their return locally. And I think that still generates a really good return over the long term if you can diversify it within your portfolio. So I think if we really look at returns out of maybe a bond perspective, you can expect, depending on the term, you of course commit to anything between 8 and 11%. I think out of a equity-based component, obviously with growth assets, you also always need a little bit of time, but it is still very realistic to expect a return of CPI plus 6, CPI plus 7 over a longer rolling period. So I think combining these different assets, I think in any portfolio, you always want a diversified approach in terms of managers and exposure geographically, where I think Africa, in principle, can really fit into that very well.
Right. Moving down the line, what is, we see China, right? And we hear about China investing in Africa and massive amounts of investment coming into Africa. And you can see why. Great demographics, huge number of workers, abundant natural resources. Why is China making the investments in Africa and the rest of the world is scared to make that investment right now? Or when will they come?
I see you reserved the difficult question for me. I think the reality is China in particular has a very strategic focus in terms of their underlying investment strategy. You touched on the natural resources. I think that's a big component of it. Looking for access to natural resources that will continue the strategic investment of review or the strategic investment strategy that the Chinese government has taken over the course of a couple of years. And then I think the reality is broader than just investment opportunities. I think part of that is geopolitical. We know there's an ongoing geopolitical struggle for who's going to be the next dominant force across the world. And I think certainly on the continent, the Chinese and increasingly the Indians are gaining a foothold and looking to establish themselves. So I think that picture is a little bit more complicated. What's prevented the US and Europe in particular taking the same investments? I think part of that has been over the course of the last decade, there's been a greater internal focus from both of those regions due to a plethora of reasons.
Okay. Well, Samantha, you cover all of Africa and the bond market. What can you tell us about the differentiation within Africa, about right now where there might be severe strain and places to avoid, and places that, obviously, from my perspective, if a country or a bond market in a country can come through this period, in relatively good health, it would set them up for excellent returns in the future. Where are some of those places?
Yeah, thanks for the question. So well, on the continent, I'd say if we're looking at bond prices specifically, on hard currency bonds, so dollar denominated bonds, we see stresses in the likes of Zambia and Ghana, mainly because they're going through a restructuring process of their external debt. That doesn't mean that the macroeconomic fundamentals aren't going to improve. In the case of Zambia, it's already started to improve, and there's a lot of sectors in the economy that's doing pretty well, including the electricity and production sectors, including the agriculture sector as well. So there has been a lot of financial stress, and you can even see it when you look at bond prices of Egypt and the likes of Kenya as well. But it's not necessary that they're going to go down a darker path of restructuring. So I'd say that there's still plenty of opportunities even in those markets, especially from an investor point of view. And I think governments are realizing that, governance and all those qualities are starting to play a little bit more of an important role. They're working together with international multilateral institutions to put their sort of policies on a right path. And I think it's also the change in the US environment, in the global environment, that could also kickstart and help investment. The one thing that I think countries are learning perhaps a little bit more the hard way is on currency flexibility. I would say, apart from South Africa, where you have the rand that's obviously free floating, there's not too many countries on the continent that have that from an FX point of view. So, some of those lessons are being learned.
Would you say that's a prerequisite for stronger investment coming in? Or, we know the pitfalls of hot money coming back out too.
Yeah, so in Egypt, for instance, they were a big receiver of portfolio flows coming through, and that helped increase their FX reserves quite substantially. But now the authorities are more inclined to get FDI because they worried that further issues or another severe downturn on the global front would mean that those flows would reverse, or those portfolio flows. So the issue in Egypt now is basically them devaluing their currency and making it a little bit more investable, or making the environment a little bit more investable for FDI to come through. Because I think a lot of investors that are looking at Egypt in particular are concerned about valuation, and so FX plays an important role there. So I think if the countries that do have balance of payments issues allow FX flexibility, you should be getting investments coming through.
Jimmy, I know you're a commodity bull, and do you have to be bullish on commodities to be bullish on Africa or South Africa right now?
Not at all. Commodities have gone through a very extended cycle, and what I'd like to call a super cycle. And so you've seen commodity prices remaining at elevated levels. You've seen mining stocks benefit from that. I mean, you're still achieving the same level of output, but selling at a higher price, getting a higher average return in, and your revenues are looking great. But to be bullish on the South African picture is not to be bullish on commodities in isolation. The South African picture has tier one banking infrastructure. We have markets that have proven to be resilient above and beyond the global picture. I mean, if you look at the JSE's performance inside the first 3 months of the year, we'd already done more than 10% on the JSE, and the S&P 500 hadn't done that. So we have a host of good assets, good companies, and good businesses in South Africa that make the South African picture very attractive. It just so happens that we have commodities as well to benefit from it.
Elke, I mean, could you pick up on that idea that South Africa as an investment destination, or talk about things that you're bullish on right now?
I think it's important to realize, as Jimmy mentioned, I think there's quite a lot of opportunity in South Africa, and I think we really saw that with China reopening now, not just out of a commodity and resource perspective, but out of an agriculture perspective as well. And I think that's a sector that performs actually extremely well in the global context. I think we have a lot of challenges in terms of the logistical side of it in our country, but I think if we can manage that, there's a lot of opportunity to be found in that sector as well. I think I think it's important to really analyze the companies that are available on the JSE and combining different asset classes. As Jimmy now mentioned, I think really comparing it to different stock markets in the year and how we are digesting this high inflationary environment, I think our market is absorbing it much better than a lot of international stock markets are. So I think we're playing in a context where we're just used to the cycle a little bit more. And yes, the consumer and the average business is definitely feeling it. But I think there's also a lot of opportunity to be found within a scope for, I think, energy sector, where we're challenged in that context at the moment. But there's also a lot of opportunity to be found within that space.
It is interesting on energy. I mean, I've come to South Africa and learned it's a bit of an energy crisis at the moment, but the whole world is having an energy crisis. And we're trying to make this transition at the same time that there isn't stability already in energy in a lot of places. And the amount of investment that's going to be needed it's staggering everywhere. Is that an opportunity? What is the opportunity sort of within that, the exact opportunity for investors? Is it within utilities? Is it within the commodity market? Is it within broader infrastructure somehow?
I think it's a combination of all of that, and I think basically implementing into depending what sector you're running in, but if you can optimize the energy utilization, and should it be renewables or whatever it should be at this point in time, but to basically thrive through this stage, because it is a global challenge. And I think out of a European context and a US context, everyone's challenged with this at the moment. But I think if you're going to be able to survive through this, and this would be out of an agricultural component, resources, commodities, mining, everything is challenged at this stage. I mean, even challenged in a financial sector. So I think just optimizing this phase, where I think most businesses are, if you really go to look in that context, and I think that brings a lot of opportunity in terms of that.
Along the same lines, Shebo, where do you see real opportunities, within this space? Can South Africa work or Africa work in the context of high inflation? Do I need to wait for inflation to crack before I invest in South Africa or Africa in general?
I think the inflation question in particular is an interesting one. If you really think about emerging market businesses across the board, including ones throughout the continent, we are experts at thriving in high inflation environments. Elevated inflation isn't unique to businesses, to consumers throughout the continent, and throughout emerging markets in general. So I think actually, in a perverse way, emerging market businesses are well positioned to thrive in that environment because they've had to for a long time. I think when you're looking at US and European businesses in particular, they haven't really had to deal with elevated inflation since the 70s, right? So a lot of these businesses haven't had to come up with strategies to thrive in that. In terms of opportunity set throughout the continent, I think the opportunity set is broad, whether you're talking about technology. We have some of the best fintech businesses and fintech opportunities around the world. But I think as an investor, as a business, it's really about being discerning. Unfortunately, whilst the opportunity is broad, the ability to unlock that and commercialize it, that skill set isn't translated equally across all companies. And it's a case of really identifying leadership that has the ability to not just identify opportunities, but also put in place processes to unlock them.
And it's interesting, along those lines, you think about technology, you think about developing new technology for the globe from Africa, but also leveraging foreign technology and putting it to work in Africa. And how do you see, from the outside, how should I see that as an investor? It's just a broadening of AI or a broadening of the incredible things we're seeing in technology. Is that just a bullish tailwind for Africa that has such a high supply of resources, workers, and opportunity?
In reality, I think some of the exciting technology coming out of Silicon Valley and those developed parts of technology world probably won't have immediate applications in most parts of the continent, just by virtue of where we are in terms of our development life stage. I think what we've seen over the course of the last decade or two is the businesses that create or take advantage of technology to solve specific problems are the ones that thrive. Safaricom with their developing of M-Pesa and now MTN taking that on with Momo has created honestly a world-class payments methodology that has become popular because it addresses tangible needs. So I think as a outsider looking in, it's not about taking technology and just finding applications. Here it's about really integrating or solving on the ground issues, and
like
those
a clear vision.
Yeah.
Problem to solve. Samantha, changing gears. Well, it's certainly a lot of payments technology here at this summit, so it is a very interesting place. We've seen valuations in payments companies and competition in that space so high, but changing gears from payments to currencies, and we're ForexLive, so we're always talking about the US dollar, and for emerging markets, a strong US dollar is a terrible curse to have. Now, at some point, the US dollar will crack. For me to get bullish on Africa, do I need that to happen first? Or do I want to be early in that trade? Or is it maybe better to be late?
I think it's a combination of things, because what we've seen, at least on the currency front in Africa, is that some countries do hold their currency at artificial levels in that they don't allow sort of currency flexibility. And it becomes a struggle, because in many countries like Nigeria, currently potentially Egypt that has a FX backlog, and Kenya, there's investors still trying to get some of the FX and repatriate. So it becomes a problem, and the dollar will be critical for that. Obviously, a weaker dollar, sort of the turn in monetary policy stance by the Fed, which will lead potentially to a weaker dollar, would be better for these countries and for looking for investments in them. So I think there will be plenty of opportunities, but sometimes we also have to look that these countries have structural current account deficits, and that flexibility on the currency is something that's needed despite the level of the dollar. It just needs to adjust.
Where we look at the global economy right now, and that's what we're talking about, where the U.S. sets monetary policy really for the world, and we're at the top right now, or very close to the top. And as that turn happens, how are you thinking about the investing landscape, particularly in Africa, Jimmy?
Well, I think the U.S. picture has been a very different picture if you look at the US 2023 versus the US 2021 versus the US 2019. Monetary policy shifts have taken place. The Fed Chair Jerome Powell, along with all his other Fed governors, have taken almost a moving stance on this is our stance on this particular thing, and then it doesn't work out, and they backtrack, and the US has to now say, okay, no, we're taking a different stance, we're going to be more accommodative of monetary policy, and that sort of developing mindset that the US has applied is something that has benefited the US to this extent. But if you look at what it then means for the global picture and the global landscape and everybody playing alongside that, is you're now having countries have other conversations. You're having conversations around, do we still need the US to be the leading voice on this topic?
Do they?
I don't believe they necessarily need to be. You're seeing an emergence of things like the BRICS bloc, where other participants around the world are saying, we can function, we want to function, we want to do certain things differently to how things were done in the past. And that's very telling of not only where we've come from at a global level and at a developmental level, but also where we're headed to. So you look at countries like China that are repositioning their economies, they're repositioning their infrastructure. I mean, just today, China released some data points around imports and exports. Their imports were down about 7.5% or so. Their exports were up. And so on a net basis, China is saying to the world, we're going to import less, but we're still going to push our product out, export more, and now we're dictating the terms upon which we are doing that. So that's one isolated example. But what you're seeing over all the countries around the world is you're seeing a differentiated approach to how we manage the situations, how we managed COVID, how we manage the inflationary environment. South Africa, our own central bank, hiked interest rates higher than what was expected prior to the US doing that. And to Tsepo's point is the inflation picture for us as an emerging market is something we've dealt with since the dawn of our democracy. And so I think the overall picture, when people are now looking at, is America still the leading voice on these sorts of conversations? Yes, there's still a critical player. No one can deny that. Yes, there's still a very influential player at a broad level as well. But you're seeing that exactly what Tsepo mentioned is happening. African solutions are solving African problems on African timelines. And I think that's the development that you're going to see continue to happen from the African continent.
It's a very interesting point, because the paradigm of the last few decades hasn't benefited Africa in the way that anyone would have hoped. There's some optimism here, Elke, and you talk about positive returns, even in an environment where we've seen energy problems, we've seen COVID and huge deficits, external deficits as well. What are the things that are worrying you right now to go down that line, and what are the sort of the challenges that really need to be overcome for the people here to get very bullish on local markets?
I think there are a few concerns which we're all aware of course, and I think that's in a global context. I think with any country, you don't want political uncertainty and dealing with that on a continual basis. And I think you just touched on that when we were speaking about leadership. And I think that becomes extremely important, just the overall health and the sentiment about a country. Because I think a big problem around returns and around expectations in the market is about sentiment at the moment. We're losing a lot of talent, unfortunately, in the country when it comes to different sectors with immigrations, and I think that's one of the first components we do need to deal with. I think starting with leadership, political uncertainty, economic uncertainty, and then dealing with all of that. I think a lot of the challenges, unfortunately, because of the landscape of our country, the level of inequality is just too wide. So a lot of the reactions that you get out of this high inflationary environment, hiking interest rates, the impact is just too tough, unfortunately. And combine that with load shedding and all of that, unfortunately, a lot of smaller businesses are just failing. So I think managing all of that and ensuring that we're just optimizing the opportunities that are to be found here, because there is a lot in the country, and I think it's just being mismanaged at the moment.
No, I talk to people here, and it's Canada right now, there's a real lack of workers. We're bringing in even 1 million immigrants a year in a country that's smaller than South Africa, and still not enough workers. Yet here you have enormous youth unemployment, very talented people, hardworking people, and that's just a mismatch that markets have to solve in some timeline, hopefully sooner than later. But changing gears again, Chepo, gold we're in Johannesburg, city of gold, founded gold, and gold is at near record highs right now. And I remember when gold was hitting, 1,600, 1,500, 10 years ago, and there was this excitement. There were these exploration companies. There was money coming into the sector. Is there, where is the opportunity you see in South Africa, or can it be harnessed here, or along those lines, are you bullish on gold?
I feel like you're picking on me.
I'm so
No, in terms of opportunity set for gold in particular, unfortunately, I think South Africa is not going to participate dramatically in this gold rally, just by virtue of our deposits and resources being depleted. I think certainly if you're looking on the continent, West Africa, Ghana in particular, presents a great opportunity set for gold. And naturally in an environment where there may be structurally higher inflation, that would bode well for the gold price. But I think beyond gold, there are opportunities within the commodity space. We naturally talk of electric vehicles in the world, and the hope is by 2030, half of the cars produced and sold around the world will be electric vehicles. I don't think that's realistic, but even if you meet half of those targets, that bodes well for nickel, that bodes well for copper. Certainly, I mean, just to give you a sense, roughly in internal combustion engines use 2 kilograms worth of copper. Electric vehicles use between 40 and 50 kilograms. So that gives you a sense of the sheer ramp up in demand for copper and nickel in particular. And I certainly think countries like Zambia, given their deposits, are well positioned. Again, the opportunities there, it's really just a case of the right businesses taking advantage of this, the right policies to make sure that we don't miss the next super cycle.
So you mentioned Ghana, Zambia. Are there places you would avoid? Or if I see, I'm going to see a list in Toronto, there's a lot of mining companies that are investing in Africa, in countries all over Africa. And, I need to differentiate about what's a good place to do business and what's a bad place to do business. And you mentioned a couple, and is that sustainable? Is it durable? And is it worthwhile investing in these places?
I think maybe Sam can unlock a little bit better than I can, but certainly I think there's a few different approaches to investing on the continent. Certainly you can look to identify particular projects that you want to invest in as a company, as an individual, depending on how deep your pockets are. Alternatively, it's really looking at companies that have a strong track record in making those decisions for you, in finding the right countries and geographies, and making sure that they unlock the opportunities from a very organic perspective. Certainly in the South African context, the likes of Goldfields are doing well in West Africa.
Okay, say I make the bull case for copper that it's going to double, and I believe in that as well. There will be a huge supply shortfall. Yep. And the time to take to build a mine in Canada, it's 15 years. I mean, you can't fix that gap. in that time. And I would assume those timelines are shorter here. And where will the world beat a path to try to get some of those resources? And where is it actually possible? Because the timelines aren't particularly short anywhere.
Again, I think this is really a function of a combination of governments putting in place policies. So theoretically, the timelines could be short, but certainly we've seen here there's been big delays in terms of companies getting water use licenses to produce new mines. So the deposits are there. The quality of the deposits are there. It's just making sure that there's an alignment both between companies looking to tap into that and also governments from a policy perspective. And unfortunately, in South Africa, that hasn't been the case for the last 20 years.
That's unfortunate. Samantha, do you want to pick up on that?
Yeah. So I think Sebo made some good points on sort of the mining and mining industries, but in sort of outside South Africa, particularly, I think just looking at the likes of Zambia, which is a big copper producer on the continent, there's still things like governance, as you mentioned, and government policies, and contentious issues about tax and so mining taxes in general. So those do come up from time to time, but I think once the investment sort of climate, which is improving, once it becomes a lot better, I think you'd see a lot more companies in there. I think there are Canadian companies as well in Zambia. So I'd say from a hard commodity perspective, the governance issues are improving, especially since we've had elections in some countries, and there's a lot more confidence about the new regime.
Would you say they get it? Like a lot of these governments right now, that they need that stability to bring in that investment?
Yeah, I think so, because maybe 3 or 4 years ago in Zambia, they were charging like 20% tax for like open pit mines for copper, and now it's like at one level. If copper prices go up, then it will go up. So they've
it's kind of a win-win, right?
Yeah, so they've changed policies to sort of accommodate, and they realize that financing and just getting investments in is obviously much more beneficial than anything else. So
I'm staying with you. When I think about investing or where to invest, a lot of what I look at is sentiment. And a lot of your clients are in Europe, and they're foreign investors looking to invest in Africa. A lot of times I look for negative sentiment. And where would you say we are on the arc of sentiment around inflows in investment into Africa right now?
So I'm generally bullish.
Not you, but clients. But sure.
Okay. So I'd say there is a little bit of a worry in some countries that are already going through financial distress. So the countries like Ghana, where I think authorities are seeking help, but it feels like it's a little way to go. So there's those. There's contentious issues about countries like Nigeria, where it seems like there's a new government obviously now with the elections, and there's a lot of hope that they will do the right or make the right policy changes. So I'd say views are sort of split on that, just because they've been holding their currency steady for so long, and there's a huge FX backlog, and guys both on the portfolio investment side and I'd say from an FDI perspective as well, trying to repatriate.
You hate to make a good investment and then get killed on the FX side.
Yeah,
and
exactly.
When you're in the right place or you're in the right time, the right sector, and you get killed on the FX. We're winding down on our time. I want to go back to you, Elke, and actually all of you, and really get, for the retail traders here, your really single best specific idea in Africa or in the world. Or someone else, if you want to think about it for a second.
I think my answer would always be to still manage a diversified approach in terms of not only asset classes, but also geographically. I think there's so much opportunity to be found both locally in South Africa and Africa, with incredible markets that we have to work with. But I do think there is still value to be found depending on exactly what companies we're looking at in a US space or in a European space, what market cycle we're in. Ideally, you want to be diversified in terms of what sectors and what companies you're actually invested in. So I'd always recommend diversifying.
Okay, wait, just to kind of follow up on, my general thought is always, when an emerging market is bullish, you want to be in the financials. Is that true here as well?
Yes, I think definitely locally we're very much still in the financial space, and I think resources and commodities. I think in a global space there's a lot of opportunity to be found in financials as well. It was an interesting few weeks now, but in principle it's a good place to be. I think that's a sector that you don't want to undervalue in our country as well. I think we really have a good financial sector.
Nobody's
And we
backing
just
up
have
and leaving.
to fix the whole grey listing issue.
Anyone else want to jump in on your best idea?
I'll jump in. In terms of opportunity set, I think I'm structurally an Africa bull. I keep saying that, but I'll keep repeating it. But in particular, I think emerging markets as a whole, including South America, are looking very interesting right now. Whether you are looking at banking or the commodity space, if you twist my arm and tell you to give you a stock, I think in general Brazilian banks are looking very attractive across the board, and that would be as an investor where I would be looking at. Having said that, I have a very long-term view in terms of how I think through investments. So if you're going to panic with a sell-off in the next month or so, then you probably want to stick to a more traditional market or more traditional type investments.
Thank you very much. Anyone else?
Should I go? Okay. I think from my side, just looking at sort of economies in Africa, obviously not as diversified as counterparts maybe in Asia and obviously developed economies. And I think there's a big push on electricity, so sort of outside South Africa, when you look at countries like Zambia, Angola, where they're trying to do a lot more on the hydro space and sort of broader electricity supply to ramp up manufacturing in those countries. And you've already seen a lot of sort of FDI come through, for the likes of manufacturing in East Africa, from the likes of China, Turkey, even India. And I think, those will be hubs at some point just because, the demographics, as we mentioned, the labor costs, and now obviously better electricity supply coming through in some of those markets. So I think, Africa is still the place to invest. We have our ups and downs. It's a little bit of a down now.
Is that kind of the last piece that needs to fall in place in some of these places? It's like port infrastructure and electricity, and then obviously you have low-cost labor, so you would think that would solve itself.
I think so. I mean, a country like Uganda, for instance, I think they at the moment they actually supplying a lot more than they actually need. So you're going to get a lot of countries that are, able to export electricity to countries that need them, and the rest is just going to be built to or made to build those countries up. So I think it's a positive thing. In the bond market specifically, I think it's hard to invest in local markets at this stage with the dollar where it is and where rates are at the moment. So sort of anything linked to dollar investments in specific countries would be better.
Jimmy?
Oh, it's my turn. I have been bullish on South Africa and Africa. I continue to believe that from an opportunity base, that's where the opportunity sits, and for a number of reasons. Sam mentioned that the US picture is not looking the way it was looking. Tsepo mentioned that your time horizon and your favoritism towards emerging markets is something we've seen as an ongoing trend. Elke mentioned the diversification component and all of that. And you combine all of that, and what do you get? You get Africa, you get the BRICS bloc, you get the fact that you now have a bloc that can sustain development, can sustain technological development, technological advancements. I mean, South Africa is second only to Nigeria on the continent in terms of investment or foreign direct investment into technological advancements, fintech and all of that. And I think it's to the tune of some $400 billion in investments. So that is a very telling picture of the emerging and developed markets, being Europe and the US, now starting to take a more vested interest in what Africa is doing and in what is happening from our perspective and from the Asian perspective. To that end, where do you then align the pockets? I think there's so much opportunity out there. And I mean, as an asset management business, we're also looking at things around the alternative space. You've come from a traditional investor that as Tsepo alluded to earlier, is your investors no longer looking at certain products. So what we're accustomed to seeing in bonds and treasury investments and that sort of thing, you've now got 12, 13-year-olds asking Warren Buffett what he thinks about de-dollarization. That's a very telling picture of what your next generation of investors is going to be looking at. We're not looking at the same things that were looked at in the past. And the areas of opportunities lie in Africa.
Well, and it was just sort of to finish up, because we're just about out of time. Shepo, you mentioned, that if you can stomach it, like how much, really any of you, if you have a strong view on this, or Jimmy, how much pain do I need to suffer through, right? Because right now the drumbeat in global markets is recession, recession, recession. We've already have a lot of bad news priced in Africa and in the global economy. Is the money going to flee Africa the second it actually happens?
I'll answer this the exact same way Tsepo answered it. We're used to this environment.
Yeah.
We've been dealing with this. For us, this is nothing new.
Okay, wonderful. Well, thank you very much for listening, and thank you very much to our panelists. Wonderful ideas there. Oh, a question? I don't know if we have time for questions. Well, they're not kicking us out yet. We will take a question, sure.
Afternoon, sir. I'd like to inquire, how should resale traders or individuals go about actually looking for companies that have actual potential of being profitable in the long term? What are the necessary steps that individuals should take to look at sectors that will be profitable in the long term? Because it's much simple to say that we should focus on emerging markets, but not given the processes and steps in order to get there for individuals.
I think that's a good question for you, Elke. I mean, on the...
Apologies, I couldn't hear the whole question very clearly, so I don't know if you can rephrase.
I think it's really about a portfolio construction question, right? And the steps you need to take to responsibly invest here.
I think it's important, depending if you firstly want to manage your own portfolio or if you want a professional to do so, I would always recommend going that route first and actually speaking to a wealth manager to start setting up your portfolio and deciding where you want to diversify in terms of what, not only in terms of geographic, but also in terms of asset classes, and that would really depend on where you want to go and what you want to invest. So I would basically go that approach first, ensuring you save time in terms of, I think when it comes to any portfolio, if you do the wrong thing, it's very difficult to correct your mistakes later, or you just lose time. So if you can, in most cases at least, make the right decision from the start, you just really benefit from making the right investments. And I think having those resources to having the research done on a company, on a country, on whatever it may be. So I think that's quite important.
Okay, thank you, ma'am.
I don't know if we're going to get... All right, we'll try to squeeze one more in real quick, and then I'm sure they'll kick us all out here because somebody else is coming up next.
Hi, folks.
We can hear you. That's good.
Fantastic panel. Really very insightful. I can't recall your name in the middle. Fortunately, they've taken them down. I had a question. In terms of de-dollarization, I've been looking at this as well, and I was surprised with, OPEC's decision, or at least the Saudis, to think about yuan. Okay, so let's say this actually occurs. What's the impact of that, do you think? How serious is this? So de-dollarization, the impact of yuan being a currency to purchase oil.
Thanks very much for the question. I think we are, there's a lot of moving parts to the conversation around de-dollarization. I don't know if the Chinese yuan is the solution and the alternative to that. I mean, there's obviously conversation around the development of a new currency that suits all the BRICS bloc members if they go that route, something that Saudi Arabia and other countries that have wanted to join the BRICS bloc have been open to. In terms of the impact, I mean, I think it'll be a gradual impact. What we saw, if you look back to 2020 when the global pandemic hit, we saw the early remnants or the early signs of a move away from what was traditionally known. A trade war exposed one fundamental thing, was China became the first country in the world to take on the United States economically speaking. And since then, you've seen an emergence of a differentiated mindset in terms of how these things are approached. Now, I by no means want to say that de-dollarization is going to happen overnight. I very much believe that if it is to take place, it'll be a very gradual process where not just one bloc sees things differently. At the end of the day, I think about the stats say about 60% of the US dollars in circulation at the moment sit outside of the US. The US actually holds very little in physical currency in the US. So what that tells us is the US dollar is still a medium of exchange and a medium of trade, and that cannot be denied and that cannot be overlooked. So I think the gradual move towards having alternatives is something that's being fueled by, you look at what's happening now with the cryptocurrency landscape. I mean, there was a time where the cryptocurrency landscape was considered a scam and something people shouldn't invest in. But now you're seeing central banks develop central bank digital currencies that sit on distributed ledgers and on blockchain technology. So I think the gradual conversation about, are there alternatives to the US dollar? What do those alternatives look like? And are those, most importantly, I think, are those alternatives sustainable? Can we all get to a point where we agree and say, this is what we are now going forward with? The same way we agreed on the dollar becoming sort of the medium of exchange. I think there's a lot of conversations that still need to happen, that are still developing conversations. But what's inspiring to see is you're seeing countries take ownership of their own developments. You're seeing countries become more patriotic about, we develop in-house, we develop the technology and the intellectual property, and the human capital is developed within our borders before we then externalize it outside. That then paints a different picture where countries can now dictate the terms upon which their intellectual property and their human capital is utilized in the global scheme of things. The same way the commodities guys dictate that. So hope that answers.
Thanks for all the questions. We're out of time.
Wait. Hello. I hope everyone is doing good. I have one begging question for the panel.
I really don't think we're going to be able to take the question.
It's a quick question. It's a quick question, and it's a pressing question. My question is, why doesn't Africa have any extensive oil extractions? We don't have oil rigs. We simply have refineries. So my question for the panel is, why don't we have such infrastructure in Africa?
So Nigeria, Angola, Gabon, Cameroon, Ghana all have big oil markets. The problem is we don't have as many refineries, so we send the oil out and then it comes back in. But with Nigeria right now, and Angola's got a small refinery, with Nigeria right now there's going to be a big oil refinery commissioned later this month. And I think it'll start operations maybe in Q3. So, yeah.
Okay. And there is some offshore exploration going on in Africa as well. So hopefully there'll be some positive news there. But thank you very much to our panelists. They should all be circulating around in the next little bit if you would like to talk with them or you have more questions. I certainly will be, and I'll be talking tomorrow about conviction. And how to maintain conviction, which is something you certainly need to have to invest in emerging markets. So thank you very much to everybody once again, and thanks for coming.